Mortgage rates just hit the lowest levels we've seen in over 3 years, but inflation this morning came in hotter than expected. So the question is, are rates about to fall more, or are we going to see a stall out? Let's break it down. So this morning, 30-year fix opens at 6.05%, down from last week, 6.10. And it looks like the market is kind of in pause. As this morning, we received the all-important Fed's favorite gauge of inflation, PCE, personal consumption expenditures. And by surprise, it came in hotter than expected on both month over month and year over year. On a month over month rating, we saw personal consumption expenditures rise 0.4%, and year over year core inflation is yet again at that 3% target. Bonds, which ultimately control mortgage rates, are kind of not responding just yet. And it's in tandem, we received GDP for quarter four, which market was expecting 3% in growth, but instead we saw a huge miss, 1.4%, which is ultimately boding well and kind of shielding some of the moves in mortgage-backed securities. Weak growth, sticky inflation equals volatility, and that's really what we can expect going forward. Right now, the 10-year Treasury is holding near that 4% level, and over the last few weeks, we've seen a huge surge in refi demand, almost 132% year over year, which is something I know the markets are feeling, our clients are feeling, an opportunity to restructure debt at these multi-year low rates is a huge opportunity. The key here, though, is rates have rallied significantly over the last few weeks. Now they are kind of in this, yet again, a wait and see moment, kind of a consolidation trading pattern, really waiting for, hey, is inflation truly going to improve? The market is looking for clear and concise clarity on the inflation piece. Once that actually bears fruit and we see some consecutive reports where inflation has finally cooled, I expect, as does the market, where rates will start again a meaningful rundown. That said, if you're a buyer or seller, now is the time to really lean into the experts. Timing the market from a rate perspective can put you at a disadvantage. So engaging with a professional and understanding the opportunities that present to you now is critical. If you're having those conversations and need guidance, please reach out. We're here. We're happy to help. As always, if you find value in this content, please like, subscribe, forward. We're always here to support. As always, let's make it a fantastic Friday and an even greater weekend.